This is Chris from thetraderguide.com taking a look at an exotic pair. This is the Singapore dollar Japanese yen chart on the monthly time frame. I'll drill down as I normally do. As you can see, this month we have pulled back a bit after breaking a 7-year high. Massive continuation pattern. We've had a huge move. So now the question is, you know the directionality, at least in theory you do. So the question is, how do I get in? So let's take a look at this. So obviously bullish weekly, kind of hanging around here. And when you get a move like this, an extraordinarily bullish move like this, you either want to see some type of pullback or you want to see sideways action. Basically, you need time for people to get excited again. Remember, trading is an emotional game. What you're looking at on the chart is the expression of how people greed, fear, whether they like the Sing dollar or, in this case, they don't like the Japanese yen. So we're kind of looking at this situation right here. Last couple of weeks continue to be choppy. We did have a big sell-off, kind of recovered, and now we're just kind of hanging around 90 to 70 as I record this. Go to the daily chart, and lo and behold, the pattern is starting to look more and more like a bullish flag. So at that point, that's what I'm going to use as a signal. This top-down analysis is one of the best ways I know of to place a trade. You're sticking with the trend. Obviously nothing's 100%, but the reality is if we do break higher, more likely than not, there will be people willing to jump on board. So you have two potential entry points. You could either enter on a break above the flag, and let's just call that 93.25. Or if you're going to be extraordinarily patient, you could wait until 94.60 just to break this kind of triple top situation. Either way, to me, this looks like a market that I do not want to short. So somewhere around 93.25, I'll be looking for a potential buying opportunity, and then I would just put a stop loss at 92. So it's 125 pips. Sounds like a lot. It really isn't, because this is a continuation of a longer term trend. Obviously, you're going to run into a little bit of noise up here at 94.50. Even if you took profit there, it's about a 1-to-1. That's fine. Remember, you can always drag your stop loss up as it goes in your favor. I don't mind 1-to-1 when it's with the longer term big trend. Certainly wouldn't go under that. But I do believe, honestly, if we go up here, watch the other yen-related pairs. They'll probably take off as well, and more likely than not, we'll actually break through there. A little bit of psychology coming into play at about 95. Remember, you need to pay attention to USD SGD for the Singapore dollar strength or weakness. And since this is more or less about the yen lately, you definitely need to pay attention to dollar yen. Dollar yen ran into a huge psychological barrier at 130. If we clear that, there's almost zero chance this won't follow right along